Sudip Bandyopadhyay also joins us on the show right now. Sudip, hi, let's begin by discussing auto and auto OEMs itself. Tata Motors has been having a good couple of days after the launch of their latest Curve model. You also have, of course, Bharat Forge reacting to numbers. What within auto looks interesting to you?
Numbers, I know it's an ancillary you can call. I think it's fantastic set of numbers. Nobody expected these kind of performance from MRF, considering that we had seen J&K, we had seen Apollo, we had seen Seat. So I think it's fantastic bunch of numbers. Apart from that, I think even Bharat Forge commentary, as was being pointed out, was very, very positive. They also talked about export markets picking up. And I think that's very, very interesting because Bharat Forge has some exports. Defense, I think, is shaping up well. And the fundraising and initiative which they are taking should support growth in future. I think so overall, I think Indian auto ancillary companies are getting their act together. They are tightening their belt, improving performance, and the valuation had already moved up. So I would say they're trying to catch up with the valuation in terms of performance. That's definitely happening. I'm not sure whether it's fully happened in a lot of cases, but the effort is definitely there. As far as Tata Motors is concerned, yes, the new launch of the Curve was an interesting development, but I think I'll be a little cautious because the commentary on JLR for Q2 is not that robust, and I think we'll have to wait and watch. There are a lot of headwinds in China and Europe as far as JLR sales is concerned. So, and Tata Motors, majority of the consolidated profit comes from JLR. So we'll have to wait and watch. EV, while being interesting and futuristic, at this stage it plays a very, very small and insignificant role in overall Tata's profitability.
Since we're talking so much about EV, Sudip, hi. Afternoon. Just wanted to ask about Ola as well, given that the listing is due for tomorrow.
Well, Aisha, I think there is a lot of excitement around this listing. It is an electric scooter company. But I think, of course, the excitement will be there tomorrow and for some time. But real performance and real market, reality will be known after may be about 6 months to 1 year's time, when competition really hots up and Bajaj launches its CNG vehicles. We'll have to wait and watch this space. So long term, I don't think I will recommend a buy in Ola. But short term, I think if you are interested in trading, interested in short term positions, I think Ola can be a good bet because the excitement definitely is there around electric vehicles.
Talking about short-term trading ideas, we do have Sudeep Shah also joining us to talk to us about just that. Sudeep, hi, it's the day of the weekly options expiry, but looks like it's going to be on the side of the bears today. Not much enthusiasm, and maybe it's coming in from the pullback that we have seen even in the global futures.
Yeah, good afternoon. Absolutely. See, if we see Nifty also for the better part of the day, it has been oscillating between 24,100 and 24,190, 24,200. So what's happening is that post that big fall 2 to 3 days back, last 3 days, if we see the highs, they're somewhere closer to 24,350, 24,400. So every time the indices are approaching this 20-day zone, 20-day exponential moving average zone, there is a rejection from higher levels. So I feel that currently we are on a weaker footing. We need to closely monitor the global markets, how the global markets react tonight. And overall, on the downside, 24,000, 23,950 now seems to be a good positional support. So it could oscillate between this 23,950 and 24,350, 24,400 kind of range with stock-specific actions.
In the meantime, I wanted to put the spotlight on a couple of these big buzzers in the trading session. ITD Cementation was reacting to its earnings and the fact that perhaps the company is on the block because the promoter is looking to sell out stake, even though it's in the preliminary stage of that discussion. And the other one is Symphony, which has been running for the last couple of trading sessions. Let's hear out what the management had to tell us in our earlier conversations with them.
A huge runway in air cooler market, whether in the country or internationally. As a whole, our EBITDA margin should be higher than that. Historically, our standalone EBITDA margin year as a whole used to be at about 31-32%. And normally in June quarter, EBITDA margin is much lower because that is the quarter during which advertisement, sales promotion, and many other expenses are quite skewed. So in fact, we are targeting EBITDA margin better than this, not only at a standalone level, but at a console level, year as a whole.
Okay, I'm just looking at RVNL's numbers, and Sudeep, I want you to react in over here because it's quite a weak performance operationally, both on a sequential basis as well as on a year-on-year basis, and I guess that's what explains this nosedive in the stock. I mean, the revenue as well has seen a downtick of 27%, almost a 35% slash down on the PAT. Margins have gone down 180 basis points. You think the market was over penciling in or overestimating the earnings from some of these railway plays at least?
Aisha, I've been talking about this for quite some time. I think both in defense as well as railway space, some of the PSUs have been unnecessarily marked very, very high. The order inflow doesn't equate with performance on ground. And one has to remember that. And unfortunately, some of these PSU have unfortunately not a very good track record of performance. And that is apparent every time you look at BHEL's numbers, quarter on quarter. I mean, they get a new boiler order and the price moves up. But look at quarterly performance. Every single quarter, they are performing badly. There are losses on a regular basis. Same, I would say, for Rail Vikas Nigam. I think the performance is terrible. And, considering that the valuation at which these were trading, the margin of error was absolutely not there. And under the circumstances, when these kind of performances come, obviously there will be shock for the market and the valuations will be marked down significantly. So my request have been to the investors that be very careful. Don't equate order inflow with performance, and watch the execution capability and execution performance of these PSUs before you buy into these at unrealistic valuations.
Let's just bring up the year-to-date chart for RVNL and then the 6 months as well, because I'm surprised that it's only a 5% fall, given the kind of, bubble that was building up in some of these railway names, RVNL included. Maybe the fall in the days to come is going to persist. There you go. It's been a 196% move that the stock has seen just this year. And in the last 6 and 3 months, it's been a more exaggerated move. In fact, since we're talking about earnings, here's a slice of all the managements that we've been speaking with after their numbers.
It definitely remains an aspiration for us to get into double-digit volume growth. I think what's also happening is that we are now kind of coming close to anniversarying onto the low commodity prices. And we've been losing, the revenue growths have been lower than the volume growth till this quarter. We're anticipating that from next quarter onwards, we should be seeing revenue growth ahead of the volume growth. So there will be a 2 to 3% kind of gain on price, which should start coming in. We would want to be in the range of 25 to 27%. That's the range in which we would want the margins to operate in. And we're quite confident using various levers in terms of cost saving. We should kind of sustain margins in these bands.
Volumes, yes, we will be doing minimum 10 to 15% growth in the volumes of the total. And also the EBITDA should improve, even though on the year basis, we should be definitely doing more than 20% EBITDA on the total sales. So this is looking into all these expansions will be coming in the part of the financial year. We'll be having those revenues in this financial year. And the next year, definitely all this will be running at least 50-60% capacity will be running even though in the first year of the operations.
Moving forward, the occupancy will keep improving. Here, we are trying to reduce the corporates, which is length of stay, and some of the numbers which has been grown as short-lived elective cases has come up more. So the average length will usually be lower when compared to the emergency patients and compared to the complex surgeries, complex medical cases that will take a longer time to get discharged. That's why the mixture of all these things will brought down the ALOS.
The due diligence has commenced and it's at a preliminary stage right now. So, that's where we are right now. We'll have to wait and see how things progress further. And once we get some clarity on this from our parent company, we'll be informing the stock exchanges about it. pretty hopeful of a growth of anywhere between 20-25% on a year-on-year basis. I mean, I'm sure you would understand that a growth rate of about 40% or 50%, sustaining that on a larger base would be difficult.
Okay, so that's the commentary to watch out for. But in terms of the market mood, we're slipping a bit. In fact, we're threatening to go below the mark of 24,100 right now. At the lowest point of the trading session, that is, it's the day of the expiry. So the last 30 minutes were expected to be volatile in any case. But what are the individual price volume buzzers? Let me take it across to Ansh.
So Alchem Lab will be the first stock in focus, as the stock has given a good breakout from its horizontal resistance trend line, which is around 5,500 level. Also, the stock has touched record high level with good volume of over 2 times its average volume of last 10 sessions. Apart from this, MRF will also be in focus, as the stock has actually snapped its 5-session losing streak. Also, it has formed a good bullish engulfing candlestick pattern, which usually indicates a potential reversal in trend on upside, and this is backed by good volume of over 3 times its average trading volume of last 10 session, indicating good participation in today's move. PI Industries also in focus, as the stock has given a breakout from its 8-session consolidation pattern from around 4,440 level, indicating good positivity. In addition to this, the stock has also touched record high level. Lastly, Poonawalla FinCorp will be in focus, as the stock was consolidating within a downward sloping channel from last 4 weeks, and today it has given a good breakout from that channel, indicating a potential reversal in trend on upside along with good volume. So keep an eye on the stocks.
Okay, we'll watch out for all of these names in the trading session. Thanks so much for that, Ansh. But in the meantime, you have Honasa Consumer that continues to gain ground. As I was talking about, the earnings are expected tomorrow, and ahead of that, that stock is mighty excited. On the losing side, it is Lemon Tree, which is down under pressure, and AstraZeneca too is a bit under the weather right now, and even Abbott India, because it didn't report very impressive set of numbers. So just watching out for some of these big buzzers in the trading session. What else is happening in the market? Well, Trent is expected to come out with earnings. We'll get Jinesh shortly to talk to us about that. But in the meantime, Sudip, I wanted your view regarding a couple of these buzzers. Honasa Consumer, if you have enough history to track on that, and Trent, what's the visibility like on the charts of Trent?
Honasa is concerned, I was not...
Sorry, it's for Sudeep Shah. Let me clarify, because there are both Sudeeps right now on the panel.
Yeah. Thank you so much. Yeah. So if you see Honasa Consumer now, see in the last several sessions, the stock has been, say, approximately a couple of weeks now. It has been in a range between 450 to 485, 490. But on the days of declines, the volumes have been lower, but wherever in between there have been spikes, the volumes are pretty high. So that means, that confirms that on the buying side, the volumes are incremental, and with a medium-term uptrend, I feel that the stock could continue its up move in the next couple of sessions to even a couple of weeks now. So on the downside, 480, 482 level seems to be a very good support. And if this the larger picture, if you look at the larger picture, post this consolidation breakout, the stock could head up higher up to 530, 550 levels. And in such a market, when we are seeing such a selling pressure across mid caps, this is outperforming. So I feel even with the relative strength perspective, this looks good.
Okay, that's the take coming in on some of these charts, cracking quite hard. In fact, now we've given up the 24,100 print, LTIM, Asian Paints, Apollo Hospitals, Infosys. There's L&T, which is down about 2.5%, HCL Technologies, as well as a weak link, as is Wipro. Sudeep, with now heightened recessionary talks around the US, you've got the impending election as well. How do you think the client spends for IT are going to pan out, and whether this trade which just about began, you think is going to fizzle out very soon?
I think it's going to fizzle out. I think the concern is around US recession. The jobs data was nothing great, and that created a lot of pressure on the markets as well as the IT companies. Now, I don't think the US Fed has penciled in a recession scenario, and I think it's a little premature to think about a US recession. I think I'm not sure whether it will be a very soft landing, But a soft landing definitely is going to happen as far as US is concerned. Interest rates will start coming down from September, and US Fed chair has indicated that clearly. Probably there will be one more cut in December. And if that happens, I think economy will continue to chug along in a similar fashion as we have been seeing in the recent past as far as US is concerned. So in spite of all the talk around recession or slowdown, US will continue on its growth path. And if that does happen, I think we will continue to see momentum as far as IT is concerned. The orders will be back and the cancellations will not be there. I don't think elections will have too much of an impact as far as IT spending is concerned. I think more impact will be on this recession and recession fear. And if that's not the case, IT spending will be back.
Okay, well, the one stock which surely in this weak market is also flying high, or one amongst the stocks, it's Trent. It's all set to come out with its Q1 numbers tomorrow. Let me take it across to Jinay, find out what the street is pricing in. Jinay?
So Trent will be coming out with its numbers tomorrow, and the analysts are actually expecting a pretty good growth for the numbers. If you look at the consensus estimates, they're penciling down a revenue growth of about 47% coming in at 3,724 crores, whereas they're expecting net profit to significantly grow about 113% coming in at 315 crores on year-on-year basis. Moving on, there's also a strong expectation on operational front. EBITDA is expected to rise about 56% coming in at 570 crores, whereas improvement in margins could be seen and reporting around 15.3%. Now, apart from this, there are some key monitorables which you need to keep out for Trent, which will be first is the high SSSG growth in a single high digit should continue its growth trajectory. Moving on, 8 and 30 store additions are expected from Westside and Zudio with an increase of about 37% of total area addition under both of these brands. Also, a rising contribution from own brand sales from Star Bazaar will actually be a key monitorable going ahead for Trent tomorrow.
Point taken. So Trent is something to watch out for. That stock is high by 3% in the trading session. Just watching out for what else is happening in the market last 7 minutes of the trading day. So Sudeep, let me come to you and Sudeep Shah at that. What would be the BTSC trade, if at all, something that you'd want to carry forward for tomorrow? And any call on index or any specific stocks?
See, I feel the index, as we discussed, that it is heading downwards, and we are seeing constant resistance in supply closer to 24,250, 24,300, 350 mark in the last couple of days. So yes, till the time that level does not get crossed decisively, I would refrain from going aggressively long, maybe in the stocks or in indices. But several stocks do deserve a mention, right? Post stellar numbers from BSE yesterday, we have seen not only BSE moving up by 8.5%, we've seen other financial market intermediaries also, CAM, CDSL, they are also doing good today in today's trade. So I feel CDSL looks better out of all the lot. If you see the technical structure, it's kind of outperforming. It's only say 3 to 5% away from its previous highs of 25.94. So I feel here the relative strength is much higher, and today the volumes are also supportive. So kind of a consolidation breakout we are expecting here. So with a stop loss of 24.20, I feel the CDSL could head higher up to 25.10, 25.50 in the coming few weeks.
Eicher Motors will report its numbers later today. Let me take it across to Shrishti, who's joining us with a quick preview. Hi, Shrishti.
Well, yes, from Eicher Motors, we are expecting the numbers to be quite flattish. Why so? Because the overall revenues have actually remained quite flat. It was just a 1% tick on a YOY as well as on a quarter-on-quarter basis. And even the VECV volumes were not that supportive in the quarter gone by. Talking about the numbers, the revenue growth is expected to be flat on a sequential basis. 4,268 crores is what we are expecting. EBITDA expected at 1,135 crores, while the margins are expected to see some bit of an improvement on a YOY basis. 26.6% is what we are expecting, and that will be on the back of a better realizations, and that's expected to support the overall growth numbers as well. If we talk about the profit figure, then 1,031 crores is what we are expecting, and that could be a decline of 3.5% on a quarter-on-quarter basis, because look at the margins for VECV, they are likely to remain stable, while for Royal Enfield margins, we are expecting that to be at 27.5%. But overall, the domestic volumes were quite supportive the domestic volumes have actually rather declined, but the export volumes have been supportive. So all in all, we're not expecting much from Eicher Motors this time around, but indeed the margin figure will be the key to watch out for. 26.6% is the number, is what we are expecting. But indeed, apart from that, how is the company looking at the competition that is seen to be building in the premium segment is something that we'll be watching out for. And what is their trajectory or their outlook on some of the new product launches that the company is planning? This is something that we'll be watching out for. Back to you.
But at that's the word on Eicher Motors and what to expect there. Sudip, just wanted to understand what your portfolio strategy has been in the last month or so. And I mean, I could squeeze down to a few weeks as well. Sudip Bandyopadhyay, that is. It is a fundamental question. And whether or not there's been any, any profit taking, any additions or deletions that you may have made.
Well, I think, this recent sell-off didn't have any impact on my portfolio. That much I can tell you. At least I didn't panic or advise people not to panic. I think this correction was predominantly on the back of yen trade unwinding. And, I still believe that this phase will pass and pass very soon. There is enough and more liquidity coming into the system, domestic as well as international, which will keep the market buoyant. So there is absolutely no need to deviate from an adopted strategy, and Indian macro factors continue to remain robust. As far as corporate performance is concerned, we'll have to wait and watch and specifically focus on companies, having potential and a tailwind to kind of invest into. And I've been advising investment in companies in infrastructure, construction spaces in particular. I continue to maintain my positive view. So, and Larsen & Toubro, once this correction happened, little bit correction, again, becomes a good buy for a long-term point of view. Companies like in the new tech or new gen companies, I've been positive on delivery and I continue to maintain my view. The quarterly performance this quarter has come better than expected. And I believe this trend will continue. So that's another stock which continues to remain in the portfolio. Amongst the power space, we have been extremely bullish. NTPC, we believe, is still a good buy. It has been doing very well, performed very well, and will continue to do well. So power, construction, infrastructure, and some new gen companies continue to remain in my portfolio and favorite.
Right. Okay, gentlemen. Great to have you all on board. Sudip and Sudip, we'll let you go on that note.
If you like this video, then like, share and subscribe to ET Now.